What's up, everyone? Today is October 4th. It's a Monday. It's the first day of the trading week, and it's the first day of that. So I'm going to be making a trade recap on Tesla. I only took one trade today, and I called it 45 minutes into market open. So this video is going to be shorter. I did take a relatively short trade on Tesla. It was only a 4 minute trade, so it did not last very long. But there are a lot of psychological lessons to learn from this video. How I found the setup, how I played it, where my scale-outs were, etc., etc. So as always, let's go to a higher time frame first, so we can see the clear, bigger picture on Tesla. Okay, so let me open up a blank chart. Okay, so as always, let's go ahead and find some zones, some levels, just some clear areas of interest. So nothing on the daily. I do have this like wide 4 hour demand, so I'm just gonna go ahead and just leave that box right there. So let's go to 3 hour now. The closest supply zone that I have for Tesla is all the way up here at like 840 something, 845. So I'm just going to go ahead and extend that over so you can see. Let's go over to 2 hour now. Also do not see anything. 90-minute, nothing. For those wondering if this is a supply zone, it is, but it is very, very weak. Plus it is used, so wasn't too concerned about that. 1 hour, I do not see anything. Okay, so I did have this 1 hour slash 45-minute demand zone right here. So I'm going to go ahead and mark it and tell you why exactly I avoided this. Okay, so before I do go over why I avoided the supply zone, let me just go ahead and draw some levels. This still is a relatively blank chart, but just keep in mind that we do have demand lower, and the main thing to keep in mind is we do not have any fresh supply above. So all this means is that Tesla has the room to Tesla has a lot of room to move higher without any obstacles in its way. Okay, so besides that, I had this 1 hour wedge that I was watching right here. So my initial plan this morning was to take the breakout of this wedge. However, Tesla had gapped up $20 pre-market. So that right there is a first clue. So now I'm gonna go more into like the trade breakdown as opposed to the higher time frame. So keep in mind that Tesla had gapped up $20 in pre-market, while SPY and Qs were slightly red. So what is this telling me on a higher time frame? One, there is news backing up this trade. Two, it has relative strength pre-market. So now I'm trying to identify some areas of interest, some levels I can potentially take a breakout of. I know I can't take a breakout of this level because Tesla had gapped up 15, 16 bucks above this level. The next level I see is the $800 psychological level. So some of you may be wondering, okay, I don't see any touches, I don't see any rejections off of this level. However, 800, 700, 900, these are all key psych levels. So that's why I'm going to go ahead and keep that up. So whenever I see key psychological levels, I have to keep them on my chart because I know that key psychological levels have a higher probability to fail because a lot of traders are watching them. So knowing that we have 800, knowing we have this, let's go down to a 5-minute chart and break this trade down even more. So now I'm thinking that, okay, so Tesla has news backing it up. It has the strength. It has volume in pre-market. So what's an area that I can get long before 800? So I'm trying to find maybe some shorter term levels to get long before 800. So this is a level I came up with. It was a wedge pattern in pre-market. You might be able to see it slightly better on the 1 hour. No, not really. Okay, so on a 5 minute, you can see that, okay, this isn't the best level, but it still technically has 3 touches. We have 1 touch right there, we have 2 touch right there, and we have 3 touch right there. So knowing we have 3 touches before, knowing that we have news, knowing that Tesla gapped up, it has relative strength. If we break this 798 level, my plan is to take a breakout of 798, first targeting 800 and then just targeting every psychological level above. So 805, 810, 815, all the way to my final target of 845. So now I have formulated a clearly structured plan on Tesla. For those wondering what my stop would have been, my stop would have been probably a 5 minute candle close below 798, because if Tesla had a 5 minute candle upper wick above 798, then that would let me know that sellers are stacked and Tesla does not want to move higher. However, my stop never triggered in this case, so that's that. So I'm also gonna, integrate this video with a lot of psychological tips. The first tip is you need a plan, regardless of what you're trading. If you have a different trading style than me, if you're a scalper, if you're a swing trader, if you are a more selective day trader like me, you need to have a clearly and a fully structured plan before entering the market. I had, I drew my zones out, I drew my levels out, I had formulated a clearly structured plan on Tesla, and that's why I was able to enter with no hesitation. So when you have a clearly structured plan, which which you create from scratch and others do not tell you, then you have confidence in your own analysis and you are more likely to take the trade. The second thing I want to go over is why I avoided this 45-minute supply zone. And the reason I avoided this supply zone is because when a price or when a stock or when price gaps above a supply zone, it's letting me know that the sell imbalances placed here were now wiped away because now price is trading above that. So that's why I was not interested in the supply zone at all. So when price gaps above a supply zone or gaps down below a demand zone, at the open, it lets me know that that supply zone is very, very weak and it will not work out. So that was just like a quick side tip. Now I can kind of go into my entries and exits along with some psychological tips. So I pretty much entered as we broke 798 when we had that premium spike. I entered 2 contracts at 8.25, so that's about a $1,700 investment. My first target was 800, so as soon as we spiked through 800, I knew retail traders were chasing. And this kind of goes into the second psychological tip. Know where your participants are placed inside of the market. So you have your institutional traders who are trying to enter at the smartest of places. If they're going long, they want to enter, at the bottoms. If they're going short, they want to enter near the tops, near their respective demand and supply zones. Next, you have retail traders who enter in places where it doesn't really make sense. They're kind of chasing these key psychological levels such as 700, 800. They're chasing all-time high breaks. So all of those levels have a lower probability of working out. So keep in mind where those retail traders are placed. And now that you know where all participants are placed, you can enter in places which make sense. So I had entered, as soon as we broke 798. I know Dylan entered closer to 792. He had a level he was watching. I personally could not find that level, and that's why I did not play it. So that is also another psychological tip. It kind of links back to the first one. Trust your own analysis. It kind of goes along with having a clearly structured plan. I did not have a clearly structured plan to take Tesla long at 792. So even though it did work out in this case, if I wasn't confident in that level, then why would I play it? I was much more confident in this trendline break, and hence I played this breakout right here. So now going a little bit more in depth to my scale outs, took 2 contracts here with a $1,700 investment. As soon as we broke 800, I knew retail traders were going to chase this move up. So what do? I just put my limit to them. So I entered to at 8.25. All I did was put a limit at $10. And like, as soon as I put the limit, I got filled because there were retail traders chasing this move higher. So I got the first one out at 10. I was expecting a much bigger move through 800, but then what I saw was this very, very aggressive pullback. And this kind of goes along with other psychological tips. A healthy pullback is a pullback which should not take out the low. It's a pullback which should consolidate or pull back slightly before moving higher. However, when I was watching this trade in real time, what I saw was an aggressive $6-7 dump from 803. So Tesla had moved from 803 all the way back down to my entry in less than a second. So this let me know that Tesla was not ready to move higher. When you see such an aggressive pullback, it lets you know one of two things. Um, One, there is a very, very aggressive seller stacked here, trading with such large size that they physically will not let the price move through. Or two, the level is just not willing to break at this time. So knowing those two things, as soon as price pulled back to my entry, I got out. I tried getting filled closer to break even, however I could not. So I just marketed out at 7.8. So I did lose 40 or $50 on this contract. However, I made over 150 on the first contract. So in net, I netted around $140 on this trade after commissions on a 1.7K investment. So in terms of return on investment, it wasn't good. However, I had a clearly structured plan. I listened to my analysis. I took the trade, and when the chart told me to get out, I got out. And so I'm going to conclude this video with one last psychological tip. Um, you have to listen to what the chart says with no bias. So the chart told me to enter along with my plan, so I entered the market. And as soon as I saw red flags, as soon as I saw this nasty rejection, I did not have the mentality that Tesla would continue to move higher. I respected the chart, I respected what the market told me, and I simply listened to it and I got out. But I am going to end the video here. It is a 12-minute video, so it is shorter. But I hope you guys learned at least a couple of psychological tips, why exactly I took this Tesla trade. And if you have any questions, just hit me up on Discord or just leave a comment down below. Thank you, and I'll be back tomorrow to trade.